They've been gone for 4 years, but in just 24 hours, BTS proved they are the only economy that matters. While their new album is generating millions, a shocking 15% plunge in their company's stock has investors panicking. So, is the billion-dollar comeback in jeopardy? Or is this the ultimate buy-the-dip moment?
You know, if you really want to see where true wealth and power are consolidating in 2026, you can forget Wall Street. The real action is in Gwanghwamun Square in Seoul, because that's where 7 men just returned from a 4-year hiatus and set off a $1 billion financial earthquake. We're going to break down exactly how this happened.
Okay, so first, let's set the stage. To really get why 2026 was such an explosion, you have to understand the silence that came before it. For almost 4 years, the members of BTS were off completing their mandatory military service, and they left this huge void in the global music industry, which built up this almost unimaginable level of pent-up demand.
So the clock starts ticking in June 2022. That's when the hiatus officially began. Now, sure, there were solo projects that kept the flame alive, but the world was waiting for the reunion. By June 2025, their service was done. That set the stage for the album ARIRANG to drop, with a massive comeback event just 1 day later. See, this wasn't just a return. It was a perfectly coordinated global event that was literally years in the making.
So now let's get into the comeback itself, because the numbers here are, well, they're staggering, frankly. The return of BTS wasn't just a ripple in the pond, it was a full-blown tsunami that completely redefined what a comeback even looks like. The scale is just immense. We're talking about nearly 4 million albums sold in 24 hours. To give you some perspective, that single-day number completely smashed their own previous first-week sales record. The demand was just immediate and absolutely overwhelming. And that dominance just rolled right onto the streaming platforms. 110 million streams on Spotify on day one. That made it the biggest debut of 2026, period. And this wasn't just about one hit song. All 14 tracks from the album took over the top 14 spots on the global chart. It was nothing short of a total market takeover. And then, of course, there's the tour. Analysts are projecting this 82-date world tour is going to generate over 1.4 trillion won. That's more than $1 billion US. This right here is the financial engine at the very heart of the comeback, a tour of truly historic proportions.
But the success wasn't just commercial. The critics, who can be pretty skeptical about these big pop returns, they were almost all on board. I mean, the headline from Rolling Stone really says it all. They nailed it.
The Guardian felt the same way, basically confirming their status as the biggest pop act on the planet. So the picture here is crystal clear, right? Record sales, record streams, $1 billion tour on the way, and critics are raving? It's an absolute undeniable triumph, which is what makes what happened next so shocking.
And now we pivot. Because while BTS was soaring to new heights, their parent company, HYBE, was showing some serious signs of financial strain. This is where the paradox really kicks in.
Just look at these numbers. For fiscal year 2025, HYBE's revenue was up 18%. That looks great, but their operating profit, it plummeted by a staggering 73%. That points to a model where the cost of doing business, especially their aggressive global expansion, was just becoming unsustainable.
And at Global Gamble, it came with a hefty price tag, a 200 billion won impairment loss. This massive write-down was tied to restructuring their American operations, basically the cost of securing a major foothold in the world's biggest music market.
So here's the crucial point. Despite all of HYBE's other ventures and acquisitions, BTS is, and remains, their dynastic asset. Their success isn't just important to the company, it's everything. The entire financial stability of this multi-billion-dollar empire rested squarely on the shoulders of this one comeback.
Which brings us to the flashpoint. That massive, free comeback concert right in the heart of Seoul. This single event is where the cultural juggernaut collided head-on with pure market panic.
So here's what the investors saw. Police had initially projected a crowd of around 260,000 people. The reality, counted by officials on the ground, was 104,000. Now on paper, that looks like a huge miss, and it sent this wave of fear ripping through the market. But what the panicked sellers didn't understand was the real story behind that number.
And this is the insider context. The lower turnout had nothing to do with a lack of interest. It was a deliberate result of extreme safety measures put in place after the Itaewon tragedy. You had 15,000 security personnel and strict access controls that intentionally limited the crowd size. The real metric of success wasn't the physical headcount. It was the global live stream on Netflix, which topped the charts in 77 countries. The demand was there, it just wasn't all packed into one square.
But Wall Street doesn't trade on context. It trades on data and fear. And the fear, based on that one single attendance number, was immediate, and it was brutal.
This chart just shows the damage. On Friday, before the concert, HYBE stock was trading high at 344,000 won. By the time the market opened on Monday, it had dropped to 288,500 won, a 15% plunge. That's the company's worst single-day performance in nearly 4 years. And this is the absolute core of the paradox we've been exploring. How can a group be breaking every record imaginable while their company's value is simultaneously in a freefall? The market reacted to a misleading optic, completely ignoring the hard data that showed the comeback was an overwhelming triumph. But what if the stock price isn't the real story here? I mean, what if it's just noise? To understand the end game, you have to look past the day-to-day market chaos and see the empire that HYBE is actually building.
This is the blueprint. Step 1. Secure your core intellectual property, the BTS reunion. Step 2. Monopolize distribution by partnering directly with global giants like Netflix and Spotify, bypassing old gatekeepers. Step 3. Own the entire fan ecosystem through your own profitable platform, Weavers. And Step 4. Use the cash from your core asset to fund global expansion. You see, they're not just artists anymore. They're becoming the infrastructure itself.
And the analysts who see this bigger picture, they are incredibly bullish. They're forecasting sales to jump over 75%. But the real story is that operating profit, they're projecting an explosive growth of over 1,000%. The target price suggests a major upside from here, proof that the smart money is betting on the empire, not the optics.
So in the end, we're left with this question. Is this 15% stock drop a warning sign that even the biggest cultural dynasties can be over-leveraged and fragile? Or is this momentary panic just the price you pay for building a multi-billion-dollar global empire, creating the ultimate buy-the-dip moment for those who can see the real power play unfolding? That is the billion-dollar paradox.
Thanks for watching Media GenX. If you liked this story, show some love with a like, subscribe for future updates, and share it around. Until the next headline.